Hello, this is EPI Advisor. The content we have prepared this time will be related to what bonds to invest in 2024. In conclusion, bonds can be viewed from two major perspectives. If you think about whether to take a high risk or take a long maturity, making a bond investment decision becomes easier than you think. In other words, taking a high risk means having some possibility of investing in so-called high-yield bonds, and taking a long maturity means the will to invest in bonds that can actually receive interest on these bonds for a long time. Our basic investment idea is not to take risks in 2024 and, if possible, to invest in bonds with a long maturity. The logical basis for why we do not choose risk in 2024 and take a long maturity is that we should first keep in mind the possibility of a recession related to an economic recession in 2024 by not choosing risk. In Korea, too, as the size of household debt grows enormously and interest rates rise at the same time, the burden of interest is rapidly increasing. Regarding companies, we have already seen the recent bankruptcy of a very large construction company, so households and companies are now the situation is bad. Therefore, this aspect is bound to be transmitted to the government. Then, the government will ultimately have a high financial burden that will not allow it to collect a lot of taxes. Also, when the current policy interest rate is issued, the interest rate level is also high. The burden of interest that the government has to pay is also not small. In other words, if the uncertainty of the economy increases because of this, the risk of default increases, so I think we should not choose risk. Also, the part about why you should choose bonds with a long maturity is also important. If possible, we will receive interest for a long time without taking risks. In other words, I would like to talk about the aspect of being able to receive interest for a long time. If the economy is like this next year and any of these situations in Korea occur similarly in the United States, of course, the US economy is much stronger and better than the Korean economy and has the ability to control the global economy. But the series of phenomena that are happening in Korea right now are not completely absent in the US. They are appearing little by little, but the US economy is still very strong. Looking at it, I don't think this part is being talked about yet. Even in the first half of 2023, I don't think there were that many investors in Korea who thought that these large construction companies would go out of business. However, such a thing is now becoming a reality. And after that, it doesn't seem like there are that many investors. This cycle, which I mentioned earlier, where the burden of interest rates on households and businesses rises at the same time, and these things bring about financial pressure on the government, is not much different in the United States. Then, in this era of high interest rates, we have high interest rates. If there is a bond that will last for a long time, it seems that there will be a lot of demand, and the prices of such assets are generally expected to rise. Therefore, if you say that this year, instead of choosing risk, you should choose bonds with a long maturity, I think it will be a good investment strategy. In our opinion, the bond investment position for 2024 seems to be this way. Of course, we can improve performance a little more through various strategies, but when it comes to analyzing individual bonds, from an individual's perspective, we actually have to look into each and every one of them. Since it is not easy to look at, evaluate credit, or analyze each aspect where performance varies depending on the maturity structure, it is better to first make the target clear. It would be better not to take risks, and if possible, there is a lot of demand. It would be better not to take risks, and if possible, there is a lot of demand. It would be better to buy bonds that can rise. However, you may think that the reason why the demand has risen so much is because the policy interest rate has dropped and the interest rate has fallen, so bond prices will rise. However, if there is uncertainty in the economy before that, then I would if you think about the fact that you will receive high interest rates for a long time, and if you agree that the demand for such bonds is likely to increase, then we will do this year, not in this area, but rather than in this area, that is, rather than short maturity bonds. I think you will agree that there is a much more advantageous strategy under the assumption that long maturity bonds have no interest risk. At a time like this when economic uncertainty is rising, We recommend investing in long-term interest-bearing bonds, if possible. I'm thinking that the logical basis for the investment strategy will be talked about a lot in the market in the future. If these things are possible, we have an additional idea about the part where I will raise the interest rate a little higher and let it mature for a long time. If we say that there is a possibility that it can be developed a little further in that area, we will also update and share why we chose that route and why we changed this investment strategy as we move into this section. Thank you.